Okay, welcome back. We've just marked up the key levels for Ford, ticker symbol F, on the 3-month and 1-month time frames, which you can see in the last video. We took all these key level finding blocks back to 2009, just so we didn't go back all time. There's just so much going on, and then we'd get a lot of overlapping key levels. But if we find in the future that there are rejection areas, like wherever, we can always go back and reassess, or go into a lower time frame to get a little bit more granularity. But in this video, we're going to check out the MACD here, Stochastic and RSI. I sort of colored them just to make them look, they reminds me of Ghostbusters, so I kind of made them Ghostbustery colors. When it comes to momentum reading, I like to use the 2-week, 4-day, 2-day, and 8-hour for grading these things. And when I am on the chart, the target chart, I'm basically just looking for what is the general strength in the last, few candles here. So clearly it broke out, and we saw that on the chart from like, $10 to $13, which I guess is big for Ford. But at this point, I would say that it's long. And the grading system I use goes from 3 to 6, 3 being a strong short, to 4 being like a normal short, 5 is long, and 6 is a strong long. So I would call this probably a 5, a long, just because you see some histogram that divergence is, weakening a little bit, but not too much. So I'm not going to call it a 6, which the lines look like, but because histogram's a little fighting it, I'm going to call that a 5. So I'm going to grade each indicator on the 2-week time frame with a score, and I'll basically take 2 out of 3, and if they happen to all be different, so for example, we called this a 5, if I would call this a 6, that looks super freaking long, even though the, why is that? Even though, oh, that's really annoying. Even though this is dancing up in the overbought area, at the moment, it still looks like it has quite a bit of strength and could break out. And same here. So I'd call this a 5, as I said. I'd call this a 6, and I'd call this a 5 just because it hasn't broken this recent high from October. It was a couple months, 2 months ago. We are on the 2-week chart, and with a fresh candle, the 22nd. So we've got a ways to go before we get some refreshment. But 5, 6, 5 is what the grade would be for me here. So 5, 6, 5, 5 and 5, 2 out of 3. We'll go to the trading journal, simulate an entry, 12 Ds, 25. This would be for Ford. It was, the 2-week was 5. And so we space it, I got like a light green color. Then we'll do the 2-day, and then that will give us a trend, overall trend. And then I'll go to the 8-hour, which is my trading time frame. I'll put that in, and ideally I'm just catching trades. I've had some counter trend trades, but this trade, man, Rocket Lab. I was trying to see if it would come down to $39, and that was, I think, 2 weeks ago. Target was $49, and as of today, I think it's at 63. I mean, it just blasted off. That really hurt. This was a small one. That's active. loss. And these numbers here is the amount that I would lose in the trade, roughly. And this is the status: active, loss, win, limit order. All my trades generally are limit orders. And then we have stop, entry, take profit. And for every stop, entry, take profit, I'll create a new line. So for example, this would be take profit 1, take profit 2, take profit 3. And of course, as the trade runs, you can manage those. Either they stop out, you can cut out early if you really just feel that your analysis was wrong, or you read something wrong, or you missed something wrong, or new news came out. Something drastic changed where you manually cut out. But it shouldn't necessarily be because you don't like how the trade's going. So, really consider that, because that's one of the hardest things. I had this copper trade. I was trying to scalp it for like an hour and a half. Okay, not scalp it. I was trying to overnight trade futures coppers, and it went up 2 cents, which is like a $75, loss for me. So I tried holding it. It ultimately stopped out, but then proceeded to target, which it was at like 447, I think is where I entered. I'm pretty sure it was 447. And then I wanted 437, which would have been like $500. And it stopped me out and then went there. So, and I did not use the wick engulfing blocks because I was trying to, do a quick trade. Reminding me of the importance to plan properly and set limit orders. And my technique is more for swing trading, because 8-hour candle is like my active. So yeah, you guys can look at this and give me feedback. And if you want a copy of this, if there's actually some demand for it, maybe I can just, delete all my trash out of here and I'll post it as a link. Alright, so we got the 2-week momentum. The 4-day, I don't actually grade it on my chart, but I do look at it just to kind of get a sense. And I mean, this looks pretty good. However, you got this floating upness and this floating downness, but it seems to have recovered. I mean, look at that thing. It was bouncing off the 50 and just pumped. So I'd say it's still bullish, and it's increasing divergence slightly right at the peak, or at the tip of the spear here. And this kind of rounding shape on the 4-day definitely seems positive. So Thursday the 11th was the last one. And that's usually like either market close, 6 p.m. or 8 p.m. So actually it was like Wednesday, probably when this changed. But anyways, the next one is the 17th, next Wednesday. So like Tuesday night we'll get a new thing, and of course it moves live. Here, this is looking very bullish. But now you have a little bit of something like, okay, we've just had a shot. And that shot was not nearly as strong as this. This is heading down. This was flat. Here on the 2-day. Anyways, I would call this a strong long because it's just crossing over, so that would be a 6. I would call this a 6 because it's breaking through, but it hasn't had a tremendous amount of success staying up above. Well, yeah, it's 1, 2, 3, 4, almost once a month. So let's go, but since it's flapping, I'll call it a 5. This is curling, this is shooting up. It could kind of come down. I'll call it a 5 as well. So a 6, 5, 5. So 5 is the average. Light long. And then we'll go to the 8-hour, which is the trading time frame I like to use. And we can see that the most recent key level was here at 1350. The next one up is at 1529. So a bit of a gap, right? So it's kind of an abyss. So I wonder if we'll trade back down. So you can see a range here. Key level is poked up once, poked up twice. Rejected. That was early November. Broke through. So because these are so tight, the decision is going to be where in here do I set entries? And because you're isolating this, I would say probably in the middle would be the safe and smart thing to do. So I'm going to draw a key level down to the 50% roughly with those two. And we'll make it dashed, but we'll thicken it. Okay. So for the 8-hour, getting some nice strength. Getting some super strength. So that would be nice if we get some rounding and re-explosion. This is already overbought. We'll see what happened last time. But we got some kind of bounce here. So we can either stay up here. We could probably come to the 50 and move back up. Or we can crash all the way down to kind of reset the ticker for continued expansion or to end up collapsing. So this I'd call 5. This I would actually call a kind of a 4 or 5 short or long. We'll go 5. This might be a 4. So 5, 5, 4. Could be a trending trade. And one additional touch I like to do is throw on this customized Fibonacci. And open this whole screen. I'll do it on the 8-hour. Make sure everything's kind of auto-adjusted. Start from the 0 line, moving north. So I like to go to the most recent high point on the 8-hour. And this basically just gives me a sense, hey, is MACD or whatever I'm looking at following a certain pattern. So I've got the 0.786, which is like 7.86% or almost 8% off of 0, and the negative of that. So it creates this little channel, little stream. And then we look here and we see that the 382 is pretty strong, but generally the second range that I'm kind of looking at is going to be the 0.5 to 0.5 if applicable. Otherwise I want to kind of see, can we break through this with the MACD before bouncing, maybe continuing up. It's just a nice indicator. If it can break through, you're kind of in a new zone. And I look at them almost like key levels. But it's more of a measurement tool than a necessarily definitive key level. Sometimes there's more power when they cross in the stock price, when they cross certain lines, but it doesn't always hold true. I just use it more of a reference. And then for stochastic RSI, I'm basically going to do the same thing, but go from the 50 instead of 0, and then go whichever direction I'm sort of shooting for. Take the 100% line to the 100, which is the max out for stochastic. And again, you can kind of see this range. And drag it back if you want to see more. You can see it either gets stuck inside the range or punches out, punches down, punches up, punches down, and it just kind of helps when you're at the precipice. What's going on? I like it, but it can get a little eyesore confusing, so you can either make them faded or do something else. And I'll do this one. There. Nice little range. Breakout. They're probably gonna have a pullback, at least, potentially even into the range before it decides what to do, or maybe it has some new strength. So those are more for monitoring. Okay, so we've gotten the intended trend and direction. So the next thing that I'll do is I will create the risk design or the risk strategy. I like to call it the risk bloom, because you're blooming your potential risk and reward through a strategy of multiple trades, right? When you enter more size. So this is a great tool that I like to use to calculate stops, take profit, and entries. So we'll do forward. I like to do 2 months since I'm swing trading expirations. That's not because I want to trade for 2 months. That's to give me plenty of space, breathing room for trading. And I think we were trying to go long here, not short. Select option 30. I like to go in the money, typically, just so the option's a little cheaper and the volatility is a little higher. That means that each option is $48. That's going to be, if this just expires worthless, it'll be a $48 loss. But I try to use 1 to 3% of my account, which is about roughly 100 to 300 bucks. That way I can build multiple trades. I'm always looking for tickers that have options contracts that cost, $50 to $100 for a 2-month expiration, just so I can add more contracts and have different take profits. So I have TP level 1, 2, 3, which you'll see here in just a second. So we've read the momentum. We kind of have a feeling how it's going. We think it's going long, but not after a retracement. So that's something to look for, because as this either takes off, in this case, for a long, I would have said I've missed this trade unless it retests this key level, or if there's real weakness, retest this key level. So if it's going to retest this, I would still go long from here. But if it comes back into this zone and starts having some weakness, I may reassess and end up going short or waiting a little bit longer. So it just kind of depends. Typically I want to be getting into the trade as it's moving towards a key level, which I call the attack point. Like in military land nav attack points. That's where I got it from. I just thought of that. I remembered that. Anyways, if I was going to go long off of this first key level, I would choose the key level itself, and I think that was January 30th we were trading until, potentially. Drag it up to the next key level. So this is a GAN box which I've customized so that the green line is the negative 8% again, or 786. This is my ideal entry point off of a key level. So if something's moving towards the key level, for example, I'd like to enter here before I think the momentum would carry it back up. This helps avoid things like this, where if I had entered here, but then you see all this volume, it just easily gets stopped out. And if we're going long, I'll put my long position on, stop, kind of look left. I have the 382 and the 0.5 off, and I default to 0.5, but because of what I'm seeing, over the past couple weeks, this is the lowest it's gotten. I'll go there, and then default TP1 is going to be 0.5. And these are just defaults that I've been using over time since September. And I've gotten a little bit more serious about trying to predefine things so I don't have to think as much, but predefine them in a way that they probabilistically and statistically and all that seem to line up with wicks that give me the feeling that I can maximize profit and minimize loss. And of course, the second position would be at 618, third position 786, and the fourth position next key level, as long as momentum was still strong. And of course you can break even out, or you can obviously stop out. But the beauty of this is the first trade, if I was to enter, it would be 1430, entry 1330, and stop 1280. So let's put those 1440 and 1280 in and see what happens. Yeah. Hey. Not yet. Okay. Thank you. 1440 and 1280. All right. Let's see what it shows. So if we were to enter 1340. 1340, I like to use 1, 2, 3 in. So if we entered at 30 cents per contract, it costs us $30 per contract. And it says minus 18, but really that would be entering at $0 loss for us. So far that seems good. That's 30 cents. So if we were to enter at 30 cents, TP1 was 1440. And so with the GAN box stretched out to the length of the trade, you can get vertical lines. And I like to use the 618 as a 60% marker saying, hey, the trade's been on for, your expiration is 2 months, but you've hit 60% of that time, and you need to consider the theta decay, because you can really get messed up if this wants to consolidate like this. Say we're trying to go long from here, and well, we should have gotten out already, and then short from here, but for whatever reason, let's just say we were trying to go long and it's taking too long. It just doesn't look good. Anyways, this is a great time frame marker. So this date, Jan 12, is the date that we'll use on options profit calculator, so that we can kind of look at that 60% gap. So it's 60%. If we click this, that would be plus 11. So if we had minus 18 to plus 11, that's like plus $29, roughly 59 cents. 59 cents. It's going to be TP.59. And then we go back, and then you look Jan 13, all the way to the stop, minus 49, that's the whole contract, at 2 cents. 0.02. And as we saw, the contract would cost $30, so the most we could lose is 30. It says 40 because that is the current cost of the option, but when we use the scale, you saw how it lowered our price. So that price. So now, if I wanted to set multiple targets, I would create additional lines and then find whatever the 618 was and input it here, and if the 786 and input it here, stop and entry would be the same, and that would look like this. So you can see you can get some very nice RR if the trade works out by having this 8% offset. So even the 1-to-1 trade, which is, well, it's not 1-to-1, 1-to-1, be 50% to 50%, but with this 8% offset, instead of being 1-to-1, it's 1-to-3, 1-to-4, which is really nice. And then because I'm thinking that it shouldn't really break this area, it's been a strong higher high, unless it wants to come back down here. That's always a possibility. That's why we need to watch as it reapproaches either this key level, or did we miss the trade and it takes off for a while. Or if it's coming back to this key level, is it strong to bounce, or is it strong to continue down, at which point we need to readjust the trade. So these are just pending entries, but they're not, hard or active by any means. Okay. So that's what that would look like. I think that's everything, guys. I would set and forget, but in particular for Ford, I need to wait on it, but we'll see. And I'll come back to it and reassess it later. All right, guys, sorry for the winded video, but I'm trying to speed these up by being less repetitive, but the only way I can do it is by practicing. So if you're watching this, Godspeed and thank you.